We start with the FTSE 100 this morning, and we've seen an attempt by the market to push on beyond 5,700. That really isn't succeeding at the moment. And you can see here's this big candle here yesterday. This was yesterday's move, the 8th of Feb, and today we've just stabilised above the lows, but nothing too dramatic. So you can see how the stochastics continue to trend downwards, and really I think the suggestion is that we do just continue to see a movement in the direction of the bottom end of this channel. Suggest perhaps we'll go as far as 5,600, even 5,560. That would be new lows well below where we were, of course, back in August. Those disappeared yesterday. So they were looking down towards 55.98, the strong support level from mid-January. There's a potential area where the market may finally begin to stabilise. If we look at the hourly chart, however, we can just see that really this is the continuation of this move, and that we've just had a slow move off oversold levels overnight, and that was to be expected, really. And again, this goes back to the general theme at the moment, is just watching these moves and allowing the market to do its own thing and pull back after what has been a very significant downside. So we had a strong drop yesterday, and the urge among most people is to chase that move on the assumption it continues. But like most things in the stock market, it doesn't move in a straight line. So maybe we'll get a repeat of what we had during the course of the 3rd and 4th of Feb, even the 5th of Feb, just not necessarily a bounce higher, but a drift upwards. And I'll be watching this downward trend line from those February highs up at 6,100. And so we could go all the way back to 5,800, maybe 5,840, and still be within this downward trend. So the risk is, I think at the moment, that people rush in to short this after the big move rather than allowing that to maybe retrace slightly and then start to move lower once again. But downside targets are for the time being around about 5650 and then on to 5600 if we do breach that level. So yesterday's low, certainly the first port of call in any renewed downward move. Over on the German DAX, and again this is looking slightly less optimistic, although it is trying to push back towards 9,000 rather, going for the big round numbers. Here is the daily chart, and you can just see how far we are now. This is our downward trend on the DAX since the beginning of December. So we could go all the way back, I think, as far as that downward trend line. That would be quite a significant reversal. That would mark a 10-11% gain for the index and would significantly would, I think, change expectations, really. We might see that begin to rally back towards 10,000, and if we hit the bottom, hit the top of that rather, and then we might sell off once again. It is the hourly chart, though, that we continue to watch. And your downtrend line here really runs along from the highs about 98.50. We could go back to 93.50, even 9400, and still really be within this downtrend. That would afford a lot of people the chance to get back on board. But you can see with the DAX how we had not really a rally, but again, it's the drift upwards the trend line down up to 9,600, and then it sells off once again. So we are still really at overextended levels on the downside. Certainly on the 4-hourly chart, with the stochastics and the RSI still down at this extreme end of the spectrum, I'd be very wary of shorting this at the moment where we are. We'd have to see, I think, a big move below 8,900 to really suggest that actually we will continue at these oversold levels. Remember, just because it's oversold doesn't mean it can't keep going down, but I think the probability, or the balance of probabilities, if you like, suggests that actually we'll have some unwinding of yesterday's move, and then we start to see the big leg downwards if, as we say, the current conditions continue. Over in the US, and we'll look at the S&P 500 because it is the key one to watch. And actually, there might be some hope that we've seen something of a short-term bottom in the market, because yesterday's session finished well above the August support level 1834, and we did go towards the January lows at about 1820, but we didn't get to them. And so there's signs maybe that people actually are now prepared to start stepping in once again and buying this market. So if we look on the hourly chart, again, there's your bounce overnight, and it just really isn't the beginning of anything dramatic. I think it's just pushed back to 1856, and that is the sort of high from the end of the session, and we'll see whether it can move on from there. I would expect it to continue to do so, I think, really, and then we're watching to see whether it starts to go from this point onwards. That's your sort of downtrend line. I think if we did another one from this level down to here, it would fit quite nicely, but I think it's too dramatic. I think we could see a bit more upside coming through, maybe in the direction of 1885, and then again you hit the trend line and then it starts to sell off. That would take us back to the 200-hour moving average as well. But for the S&P 500, intraday charts, the stochastics and the RSI have moved well out of oversold ranges, so we might see it start to steady off just below 1870, maybe in the 50-day moving average, 50-hour moving average, sorry, before the next move lower. Over on the Dow, again, just this steady unwind coming through, but at the moment no real desire to get through this key area around 16,075, because we ran out of steam there yesterday, which was again the end of the session in the US, and then we sold off overnight. We've come back again, but this was a key support level from the 3rd of February, so that was where the market stabilised when it had a brief sell-off then. But unfortunately, we couldn't get back above it. So support has now become resistance. And you've also got the declining 50-hour moving average coming into play just above that 16,116. So the risk is, I think, that we see, again, a failure to push on meaningfully above 16,100, and then we start to turn lower. But certainly, again, for the daily chart, this is the key area we're watching, is sort of the lows that we saw towards the end of January, really, around 15,875. And we dipped through that yesterday, and then we saw the buyers come back in to really try and get this market off the lows of the session. But at the moment, it just isn't enough to transform the picture from a fundamentally negative one. Certainly not for Europe, and maybe not for the US as well.